Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis, and today we're going to be talking about Hedera and HBAR, so let's just dive in and let's talk about a few things. So today we actually have something pretty interesting. We're going to be addressing the Web3 economy. We're going to be addressing Hedera basically overtaking, Bitcoin and Ethereum, which we've addressed in the past. But I want to go a little bit more in depth and kind of talk about the Web3 economy, where we are basically headed, and why the future of crypto and even Web3 in general is not going to be Bitcoin or even Ethereum. So let's actually listen into this. This is about a 3-minute segment here, talking more so about why not Bitcoin or Ethereum. Listen closely.
On top of us.
And why Hedera? Why can't it be built on Bitcoin or Ethereum?
Couple of reasons. One, those platforms are extremely inefficient when it comes to energy consumption and usage. And the reason they're inefficient is because of the underlying technology. It makes it really expensive and unpredictable to use those platforms if you're building an application. If you're building an application as a developer, you're building a business, you need to be able to model what your cost of goods is going to be, your cost of the product. When it comes to those old school tech, like Ethereum, it's impossible to know how much it's going to cost to use the network because of the fluctuation in the token price.
We've come so far that we're calling Ethereum old school tech.
And I would actually argue the fact that Ethereum is old school tech at this point in time. A lot of these layer ones have, basically thrived, well beyond the means of Ethereum's tech layers. And I think that we've seen this even with not only Hedera, but we've also seen it with other major, assets in this space. We've actually just did a deep dive in on Zero, for an example. They're doing some pretty great things in regards to scalability mechanisms and stuff like that. Again, I would argue that, Ethereum's unpredictable gas fees are extremely limiting in terms of not only mass adoption of the network, but also even use of the network. And of course, even with the Ethereum 2.0 scheduled, it does not fix the issues of gas fees. And honestly, we've talked about Ethereum in the past on this channel and really kind of did a little bit of a deep dive in on how centralized the network actually is. I would argue that, the proof of stake move on Ethereum is actually a downfall on Ethereum, because I do think that it is also going to put a spotlight in on how centralized the network actually is. Because of course, remember, proof of stake, it really kind of does show you, how many, the mechanism behind it is how much of the supply is held by specific wallets, and those wallets actually hold a better voting power on, the next major steps behind the network itself, which again, I do think that we're going to see a large portion of wallets holding quite a bit of supply around Ethereum itself.
Ethereum old school tech. It's funny you say it. That's true. It's been around since 2015.
It's yeah.
And and things move very fast in the Web 3.0 world.
Well, Ethereum's getting an upgrade, I heard, right?
They say it's getting an upgrade. I expect it's going to happen. It's been in the work for many years. It keeps getting delayed, even with the upgrade.
And remember, with Ethereum's 2.0 upgrade to proof of stake, again, it does not solve the underlying issues around, gas fees. It only solves for scalability, which means, yeah, sure, it is a little bit more scalable, but it's still going to have the unpredictable gas fees. It's going to have the expensive gas fees in general. So remember, the Ethereum 2.0 move is not really that fundamental to the network itself, and it has been delayed quite a bit, so I wouldn't expect it to launch anytime soon.
It's still going to be the case that Ethereum 2.0 is far less efficient, far less green, if you will, than what Hedera is today.
Hedera runs on proof of work or proof of stake?
Hedera's proof of stake.
And what he just said is, again, Ethereum 2.0 is nowhere near what Hedera is in its current light, which is, again, the major issue why I say, right now, crypto is still very early on. So we are still seeing a spotlight being put on Bitcoin and Ethereum, as they have been the major two to really kind of watch for, as they have been around the, longest in regards to, a lot of adoption for both of them. Remember, even XRP has been out since 2012. So again, early on, a lot of these projects are going to thrive just off of, the, OG aspect of them. But I do think that going forward, we will see major layer ones take a spotlight, change, if you will. And I think that is, where we do go next, right? When we talk about the underlying technology around Hedera, it is found it's fundamentally completely diverse than Ethereum in regards to not only efficiency, but also development-wise as well. Shout out to Parabolic Sivo for this Medium post. If you guys do want to go check him out on Twitter, I definitely advise you to. But this is talking about Hedera token service, a new paradigm, for smart contract applications. We don't need to read everything around this. All we really need to do is look into this. So let me actually open this up in a new tab just so that you guys can see it. So I actually thought that we could zoom in a little bit. So here we have it. So ERC22 HTS. So we do see native token issuance, no, yes. Gas fees, variable/high, fixed/low. And this is where we kind of go back to this video, and you can definitely see it here, where you do see, of course, the fixed average fee, at a fraction of a cent. And then, of course, you do compare it to like even, Bitcoin and Ethereum. Now, of course, these average fees have changed drastically. Like if you actually do go over to like Hedera's, website, they do have a little bit of a breakdown on both of these fee models. They are completely diverse and way more expensive than what they are actually showing here. But also you do see like the complexity, high, low, contract call to perform operation, required, not required, custom token fees, no, yes, scheduled transactions, no, yes, performance, low, high, efficiency, low, high. And also in regards to like the contract call, yes, this is a big issue. We actually see this a lot with even Uniswap. It does allow for a lot more gas fees to be let in on transactions. And again, it costs the user a lot more money. So again, there's major issues around the mechanism with ERC20 based tokens and even utilizing, again, Ethereum. So I do think that going forward, like the HTS service in regards to like smart contracts 2.0 is going to be fundamentally groundbreaking in the sense of like not only the tech layer, but also like even the usability around it. Now, we've actually talked about smart contracts 2.0 in the past. We've actually talked about how large even Ethereum, smart contracts actually are, doing trillions of dollars in regards to like just one quarter, for an example, which we have addressed for 2021, I believe. I think it was like the second quarter of 2021, they did like about like $2 trillion or so in volume, which is pretty, significant, if you will. But down here, we do see like Hedera Hashgraph announces mainnet launch of EVM compatible smart contracts 2.0. This goes back to February 3rd of this year. We've actually addressed this. We talked about it, but we do see down here, Vice President of Product Marketing at Hedera Hashgraph said the deployment of Smart Contracts 2.0 is a huge step in the right direction for developers. Smart contracts play an integral role in building the trust layer of the internet, and similarly, provide significant opportunities for the continued advancement of DeFi and other facets of, other industries or our industry. Integrating Smart Contracts 2.0 onto the Hedera token service makes life easier and more flexible for developers and their end users seeking to tokenize and transfer assets on the network. We do see down here the, Hedera Smart Contract Service is EVM, compatible and runs Solidity, a programming language used by 30% of all Web3 developers. Hedera Smart Contracts 2.0 equips Solidity and EVM compatible smart contracts with the versatility of Hedera's tokenization infrastructure by supporting, native Hedera tokens and NFTs with the Hedera token service. This creates heightened, flexibility for users, allowing developers to assess the usability of smart contracts and incorporate the capabilities of Hashgraph-based tokenization to their programming. So this is pretty groundbreaking for, of course, the Web3, scene. And when we really kind of look into this, it is something significant to mention that, when we look into the Web 3.0 area, or the area, if you will, we're not going to see the Web 3.0 market being built out on something like Ethereum. And the best part about this is like if you go to the overview section on Hedera's website, like I said, you could see like the breakdown of Bitcoin, Ethereum 2, even Hedera. I would argue that the future around Web 3.0 is going to be built out on DLT networks that are extremely efficient. But also I do think that even going forward around crypto, we're going to see a major push towards, of course, like green technology. Sustainability has been, a thing that has been spotlighted from governments, or government entities, I should say. Like they demand it around a lot of like the technology layers going forward, especially around even like companies and corporations. That's why, like, even if we go back to this video, there's an area on here where they were talking more so about like sustainability. I think that it might have been in the Web3 DeFi era, or area, sorry, where they were talking about it. But more so, I'm sure that a lot of you have probably seen it being a major spotlighted issue. I think that DLTs going forward, if they are not green and sustainable, they're just not going to be fully, adopt it in. And it's funny, right? Because like we even compare like the energy consumption on Hedera to like Visa, where it is 74 times more efficient than Visa itself, which is pretty significant when you actually think about it. Now, also talking about Web3, right? We've addressed Web3 multiple times on this channel. It's not just a buzzword. It's not something that, these major, networks and, projects are utilizing just to kind of, drive adoption and drive, investors into, of course, these major, assets. No, Web 3.0 is going to happen. I do think that it's going to be a major push as well. I think that in regards to the valuation behind it, it's going to be pretty significant. We actually do see down here like Web 1.0, 1.1 trillion, Web 2.0, 5.9 trillion. Where does Web 3.0 really kind of lie? Well, we've actually seen a major update around this going back to September of 2021. You guys remember the M13 article, which is right here, Crypto and the Consumer, the road ahead from Bitcoin to NFTs and social tokens. Here's how crypto is changing the future of consumer behavior. So they break down everything around this. They talk more so about Bitcoin and even Ethereum. They talk about, our focus will be comparing Web 2.0 versus Web 3 and the impacts of both the supply creators and demand side. Consumers, the investment thesis that we outline is predicted on two trends within Web 3. New ownership models and the rise of micro behaviors. So first off, we do see down here the Web 1.0, Web 2.0, and of course Web 3.0. And I actually love how easy of a breakdown this actually is. So we can actually open up this image real quick in a new tab, just zoom in on it real quick just so that you guys can see it. So the business model down here in regards to like Web 1.0, which was very early on, it did serve its purpose. Poor infrastructure monetization, licensed software for applications hosted on premise. And then we do see the Web 2.0 push, which was the biggest thing in the history of the internet so far, which is 2000 to present. And we do see SaaS, per seat software hosted in cloud, advertising, click and impression based. B2B take rates 30%, i.e. Apple. B2C, take rates 15 to 25%, i.e. Airbnb. So again, like to utilize Web 2.0, markets, it's pretty expensive because of course, like these centralized entities are taking a large portion of like the monetization aspect around it. So if you think about it, it's a monopoly system that is all fully centralized. That's why I do believe that like the Web 3.0 scene is going to thrive going forward. We do see down here like tokenomics or token economics monetized through network value appreciation. B2B, take rates variable upon gas fees. B2C take rates, 2.5% to 15%, i.e. Axie Infinities, 4.5% take. And we do see like a few of the major names here. And we do see in regards to the breakdown here, we do see like the value created, the web, Web 2.0, and then we do see like Web 3.0, application layer, protocol layer. And we do see like the overall size of Web 2.0 materially, surpass that of Web 1.0, and we believe Web 3 will surpass the size of Web 2.0. We have used the NASDAQ 100 index as a barometer, for the current Web 2.0 market cap. And of course, like the market cap is about like $20.1 trillion. Today, this index is 7 times larger than the aggregate market size of the 280 companies listed in the Bloomberg US Internet Index in 2000, which we can use as a gauge for Web 1.0's peak market size. We expect a greater pattern to occur with Web 3 surpassing Web 2.0, given that these networks are tokenized and measurable. And here you have the potential market cap size, which is $139.3 trillion potential market cap at scale. I think that this is a pretty, viable market, cap to just kind of say the least about, again, Web 3.0, because you got to remember, when we are talking about crypto alone and we talk about like the amount of adoption, cycle for crypto there is, and also the use cases around it, I think that, first off, we need to solve, regulations first. And then from there, we could actually kind of gauge the adoption cycle of crypto and the use cases behind it. But we've talked about the use case around Hedera itself. We've actually really kind of addressed, a lot of the use cases around Hedera itself as well. I think that going forward, we will see a large portion of everyday life be fully tokenized. And I think that once we do get to the point of like mass adoption, I think that that's when we do really see the value of crypto really kind of, starting to scale rapidly. And we do see down here like the adoption, like valuing crypto as a financial asset, embracing crypto native applications. Like this is where we do see adoption really kind of take place. Crypto as a financial asset. We do see them mentioning El Salvador's decision to accept Bitcoin as a legal tender is a perfect example, as we expect to see continued adoption in economies and histories of inflation. Adoption is not just limited to emerging markets. An estimated 46 million Americans own Bitcoin. As the chart shows below, we are seeing real, global adoption across both emerging and developed/tech markets. And I do think that when we talk about crypto in general, and I think that we really kind of, gauge it by the adoption of just like a few aspects, like for example, like NFTs. I think that NFTs for the longest time, right now has been like the major, era, because remember, right? NFTs as an entire category of crypto, got a lot of spotlight attention just simply because it gave retail individuals something to truly, utilize and be part of. I think that crypto for the longest time has always been like all right, you buy, hold, trade, whatever, it's good, but it doesn't really give you a hands-on use case feel. And I think that that's why NFTs have been a major area to focus on from like the retail individuals, because it does allow for like a hands-on use case. And I think that that's like the major issue. So when we really kind of look at like the Web 3.0 era, when we do usher into it, I think that's going to be a very large, area to look at, because you do see like the major shift here. For example, we do see like social. One-to-many communication, right? Creators build credibility and social clout, but lack direct monetary gain and risk censorship. We do see over here like network governance and token economics reward creators for driving value to network. Followers buy, creators token as a means of investing in their brands and can participate in value, accretion accretion. Sorry. And when we look at this, it's funny, right? Because we already see that being built out on Hedera with Galaxy. Galaxy is a remarkable use case. And this is just like one of many. You see like community, access, curation, content, collectibles, music, publishing. Like there's so much the Web 3.0 scene that a lot of people are just not, realizing. I think that there's a large portion that, is kind of getting overlooked just simply because, everyone is really kind of worried about bull and bear markets. But to me, I'm actually looking forward to seeing the Web 3.0 markets, because I think that that's going to be the shift that really kind of pushes crypto into the limelight. Because I think that everyone thinks that we're still very, late to the party around crypto because you didn't get into Bitcoin early on. But what about these layer ones? What about, the future technology that will take over in, crypto? To me, that is going to be Hedera. It's not because I'm biased on it, but it's because of the growth that we have seen on Hedera so far, and their, focus on the creator economy, on the Web 3.0, market. I think that this is something special. I really do think that when we look into things, really kind of, being pushed around the Web3 market, it's more so around the smart contract era. I think that, disrupting the ground floor of, what is plaguing these, major networks that have been fully adopted already, like, for example, Ethereum. Because again, like Ethereum, I'm not saying like Ethereum is a terrible network. I think that Ethereum for the longest time has done its job. I think that it really kind of is similar to like Bitcoin in the way that it has paved the way for a lot of other networks to really kind of, be built out and, truly disrupt this market fully. I think that it has done its job. And when we look at like Hashgraph as like the next third, generation crypto technology, I think that it definitely does hold its value proposition. And I do think that it could very well be the next generation of crypto technology just because of the technology stack alone, but also because of its green, aspect, its sustainability aspect, and also the usability of the network. Remember, there's so many use cases being built out on Hedera already, and we've actually seen major use cases from Ethereum already transitioning over to Hedera because of the efficiencies around it, because of the green, aspect around it, because of the scalability, the cost. Things like that are truly mattering around like these networks, fully being adopted in and being utilized. So going forward, do I think that, Ethereum is here to stay? Sure, I do think it will be here, going forward, but I do think that these other networks will overtake it. I think that this video is actually, spot on. I do think that, Hedera could overtake Bitcoin and Ethereum at some point in time. Do I think that we're still very early on Hedera? 100%. I think that Hedera is extremely new. I think that it's, still very early. But going forward, when we talk about like the Web 3.0 era, and we do see like that fully be ushered in, I do think that a lot of these these layer ones, more so like even Hedera, that are focused on the creator economy, that are focused on Web 3.0 and have been focused on Web 3.0 since its inception, are going to be the success drivers. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe to notifications on if you guys have more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. As those after you all have a beautiful day or beautiful night. If you guys are on this beautiful world, this has been Nick. Peace out, guys.